Hello, my fellow investors. Welcome back and thank you for tuning in. I hope you all having a fantastic and phenomenal week navigating through this wild emotional market of ours. As usual, this is not financial advice. It's just for experimental and entertainment purposes. Please do your due diligence before investing in any type of investment, okay? All right, so let's get to it. Let's go to the details. Here is the result of the income generated through the month of February. And I have to say I'm very happy with it. I'm not even gonna complain, to be honest with you, especially with this wild market of ours. The only thing is I may be facing some challenges going forward though, because I personally feel that I will be relying on MSTR or MSTY performance throughout the month of March, and I don't like to do that. Okay, because if Misty or MSTR decides to just take another nosedive, yeah, it's gonna be critical for us and our portfolio or our positions. Okay, all right, so one thing is that one of my concerns is basically I'm capped on my capital to invest on Misty. I mean, I'm not capped completely on capital, but if you remember correctly, or if you have been following my journey from the get go, I said that I would only invest $20,000 on Misty, but only through options. So right now, I am capped to that. Um, the other concern is basically, of course, market behavior. It has been wild and politically driven, to be honest with you. And number three, my contracts are at a stagnant position. It's not allowing me to do any cover calls simply because the premium juice is not there, and the rest of the capital is already tied up through active sell puts or cash secured puts, whichever ones you want to call it. So that's that. Hopefully, we can get a little rally going for Misty or MSTR so that we can get back into the game and make some more moves. Now, before the game, I'm sorry, now before we go into the spreadsheet, I want to take you to my history briefly, so to show you the premiums that I received throughout the month. Okay, just to show you guys I'm not making these numbers up. I want to be as transparent as I can possibly can. So let's take a look. At the moment, I have 8 strategies, basically 8 contracts that are open at the moment. Okay, let's go to history. Let's find it first. Show all. Let's go to all types. We are going to select options, and here we have it. We're going to scroll down all the way down to February to take a look at all the premiums that were generated through options, and let's not count the cancel ones, of course. Let's start from the get go. Let's start from the beginning of February. You might want to take a look away, so the scrolling one bother you or get you dizzy. But anyways, here we go. We almost there. Don't look yet. And there we have it. Here we go. The beginning of February. First, we did. There you go. We generated 100, another 30. Now I'm scrolling up. We generated another. Actually, no, that was a cover call that we paid. We generated 110. Looks like I bought another cover call, the contract back. There is another one for $30. I'm gonna keep scrolling up, people. Let's see. That's another. I bought another call back. Yeah, that's a lot of cancel stuff. That's just to show you proof that I work hard for the money. All right. Well, there you have it, folks. It's just basically I want to be as transparent as possible and just to show you that I'm not making these numbers up. Okay. Um, all right, so let's go. I guess let's go to the spreadsheet. I guess, huh? All right, just give me a moment. We're gonna get to the spreadsheet right now. All right, so here you have it, folks. This time I color coded the spreadsheet to help me follow through, basically. Especially with some of these contracts, I did a lot of rolling this time because of how the market was acting. So let's take it from the top. On the 3rd of February, here it is, there it is, there it is. That's the date that we filled it. We opened a sell put that generated me 74.92 after commissions with a strike price of $24. Then it appears that I bought that contract back for 2504. Okay, including the commission fee, of course. So originally this premium here was $100. However, since I paid 2504 to buy it back and release that collateral of 2400, I made a profit of 74.92, which is what it shows right there. Okay. Technically, I could have waited until the end of the week and hoped that it would expire worthless, but there are no guarantees in this market that that would have had happened. So I saw an opportunity and I executed. Okay, moving on. We had a cover call right over here with a $28 strike price. Let's scroll down. Let's scroll back. I mean, to the side. Oh, there it is. There it is. There it is. There it is. Was it $24? No, it was not. It was a $28 strike price. Yes, yes. My mistake, my mistake. So this one originally generated $25 of premium. However, it looks like it looks like I bought it back too. Okay. So we were able to only generate $24.92. So originally it looks like did I do that right? Yeah. Yeah, it looks like I generated $30, but then I bought it back and I ended up getting a profit of $24.92 worth of premium. Okay, now here my rationale behind that move was that in the scenario Misty begins to rally, I can open another cover call and collect more premium with the same 100 shares. Unfortunately, Misty has been on a downtrend, so I have not been able to generate more premiums through this 100 shares that I have of Misty. Okay, so I have not been able to do no more cover calls due to my target strike price is $28. And right now, that's way out of the money from the share price of Misty. Because right now, I believe the market is close, but Misty share price right now is around $21 and something cents. So basically, premiums are non-existent for cover calls at my target strike price, which is $28. Okay. On a positive note, yeah, we are back holding, but we are still eligible for the distributions. And hopefully we get a rally soon on Misty so we can activate this cover call and start generating a little bit more of income with that cover call. Okay? All right. Moving on. I'm actually going to focus on one more contract because I don't want to bore you guys to death. But I want to discuss those contracts that I rode several times, and I want to and then I was able to collect some premiums from them too. So I want to discuss those. Let's focus on this sell put over here, the yellow coated. See, as you can see right over here, yellow coated one. We It generated me $109.96 of premium after commission, of course. and it was a strike price of 26.50. However, right next to it, you can see I extended that contract. I rolled it. Okay. And I rolled it to February the 13th, which is basically the reason why it's color coded. See on yellow, let's find the yellow one right over here. And there it is again. It's another sell put roll at 26.50. I'm scrolling it down so we can see it. We were able to generate 89.92. Okay. What is this again? Oh, the taxes. And then we were not only were we able to roll it, extend out the contract, but we were able to roll it down as well. And now it's only to $26. That's my strike price. So basically, when I rolled that contract, I was able to extend the time of it as well as bring down my strike price, which means that it released 500. No, I'm sorry, $50 was it? Yeah, it released $50 from my initial collateral. Okay, and now it looks like I rolled it again one more time. So let's find it. Let's find it again. Let's find the next yellow. There it is. The roll for $26. We were able to roll it for another credit of 99.92. Okay, now this time though, it looks like I extended the contract all the way to July. Okay, I think that's the reason why I was able to generate that much of premium for it, because I extended it out, way out. But at the same time, I was able to roll it down again. See, before it was at 26, now it's at 25.50, my strike price. Okay, yeah, now I'm gonna have to wait to see if Misty's going to rally, and maybe I can either buy that contract back or maybe roll it up. But regardless, it is right now. I personally, what I truly feel that is safe from assignment, because it's months away. Okay, hopefully that's the case. You never know. People can just exercise their stuff, and next thing you know, I get assigned the 100 shares of Misty at 25.50. All right, and if that's the case, then we'll just we'll take it and we'll take assignment, and hopefully we'll get some distribution off that if we have to back hold. Alrighty, let's go and take a look at how much income I was able to generate for the month of February and how much I'm planning to reinvest back in the fund. Alrighty, drum roll. Yeah, I don't know about that drum roll, but just pretend it was a synthetic drum roll. And there you have it, folks. I was able to generate a total of $1,244 with 54 cents. But after taxes, I get to keep $945 with 85 cents to reinvest back into Misty. Woohoo! I'll happily take that. Now, what are my plans? Well, I already reinvested a portion of it to purchase 25 shares of Misty at 1944, I believe. Here is where I track my actual dollar cost average and how we are growing on how we growing the Misty position passively, utilizing the income generated through the options and distributions. Here it is. There you have it, folks. Let's go all the way down, Here we go. So let's break it down. My recent purchase, which was the last one that I just discussed, it was 25 shares that cost me $486, as you can see right there, with 25 cents. As you can see, I did not purchase all $945 of worthing shares, because declaration date on Misty is on March 15th, and we all know what happens after that. NAV erosion happens, and which is basically the ex-dividend date. So with that in mind, I wanted to preserve some buying power to continue lowering my dollar cost averaging. Okay, This Friday, we will be receiving our distributions from Misty, which it will add more value to our buying power. And we're gonna be reinvested that back into Misty. Okay. All right. So, lastly, so far in 3 months, we have accumulated a total of 71 shares through options and distribution at an actual dollar cost average of 23.22. I'm showing you right over here. Okay, I did the formula, and that's what it came down to. Not bad considering how the market has performed with all of this political pressure and uncertainties, right? Jeez, man, the market is psychologically emotional right now. So, yeah, yeah. Well, I'll take it and hope for the best in this coming months because we don't know. I have no clue how this market is going to be performing. So, either way, that'll wrap it up for today's video. Hope I was able to keep you engaged. Like, subscribe, comment down below. How are you doing through this market conditions? I'm very curious about that. Once again, this is not financial advice. Thank you for your support, and I'll see you on the flip. Strategic Investor Al checking out. Take care.